Hey guys, it's Dan here. In today's video, we'll try to understand and answer the question why the US stock market usually outperforms the rest of the world. So why is the US stock market usually performing better than the Chinese stock market or the European stock market or the emerging economies? Let's look at it and let's get started, guys. Well, first of all, let's define what I mean by the US stock market, because there are different ways of defining it. In my opinion, and when I analyze it, I look at the S&P 500, which is the index summing up the performance of the 500 biggest listed US companies. You could take, for example, the Dow Jones index or the Nasdaq index, which is a more technology index. I'm using the S&P 500 for my comparison here because it's the default index. It's also pretty difficult as a company to enter this S&P 500 index because the criteria are quite strict. First of all, you need a market capitalization of more than 8 billion US dollars. That's quite simple because usually every big unicorn can make this kind of market capitalization, so that kind of value. Then you need to be highly liquid, which means that 50% of your shares need to be available to the public. That means you cannot just sell, let's say, 10% of your shares and keep 90% private. You need at least 50% available. And the last one, that's the biggest one usually. You need 4 consecutive quarters of profits. And here you see a difference. Tesla made 4 consecutive quarters of profits, so they're gonna enter the S&P 500 at the end of the year 2020. And Uber is not entering it because Uber is making losses since the beginning of 2009, basically, since the foundation of it. Now let's quickly look at the performance of the S&P 500. Well, first of all, the S&P 500 has been introduced in 1957, so more than 60 years ago, so we have a lot of data to analyze it. And the average 10-year annual return is almost 13%, which is huge, especially compared to the rest of the world. And what you also need to know, and what is also very important, is it's a highly diversified index reflecting the US economy. I'm showing you a picture here. You can see how diverse, how many industries, how many sectors are involved. Let's look at the reasons why the S&P 500 is outperforming the other countries or regions in the world in the long term. Well, the first one is probably the most important reason, is trust in the index. What do I mean by that? Trust is probably the most important thing in the financial world. Think about an investor, for example. Why do you invest in a product or in a company? Because you trust this product or this brand to make you profits, to make you returns in the long run. In this case, it's a pretty good example with the S&P 500 because, as I just mentioned earlier, it has a 60-year history. So it's a very, very long history of successes. Of course, you had a lot of failures, a lot of crises and stuff like that. But as I just mentioned before, over a 60-year period, it gives you about 30% return on average. So that's huge. Second of all, you have very few scandals related to this index. Of course, you have the financial crisis with the banks and all this kind of stuff, but this was a general regulation topic. It was not related to the S&P 500 specifically. And then, as I also just mentioned, it's pretty difficult to enter this S&P 500 because of the criteria I gave you earlier. So that's why it's highly regulated, and also it's a highly liquid market. You will always have supply and demand, which gonna be pretty nicely balanced, and you will always be able to buy or to sell if you need. Second reason is that the US stocks, and especially in the S&P 500, they are more resistant to crisis than in other countries. I give you an example here and you will understand why. So here is my S&P 500, and all the companies here are American, so the index is in US dollars. Now obviously you have a lot of different regions with a lot of different currencies, and what is happening in a big crisis, and it doesn't matter where the crisis starts. You see it with the pandemic, but you also see it with the financial crisis, which started in the US, for example. Euro stocks, which is the biggest index in Europe, in euros. You have Chinese stocks in yuan. You have FTSE London in GBP. And you have all the emerging market stocks in different currencies. What is happening during a crisis? Well, it's pretty simple, and you can verify it for 2020. all the investors in different currencies, in different markets, they see a crisis is coming, they start to shake and they sell most of their assets in different currencies to buy into the US stock market. So actually they're gonna sell euros to buy US dollars, they're gonna sell the Chinese stocks to buy US dollars, and so on and so on. They want to sell the currency to buy US dollars because the US market is or always has been a very resilient, very resistant to crisis, and it's kind of a safe haven also for the stock markets. So what you also have to understand is the basic principle of economy, which is supply and demand. What is happening if I'm selling these stocks and I'm buying these? Well, here I have less demand for the same supply, so my price is going down, so the stocks are going down. And here, obviously, I have more demand coming from all over the world, so my demand is going up. Supply stays the same because there are not more shares available just because it's a crisis, obviously. So the price and the index, the whole index price will go up. So that's why it's more crisis resistant. Even, of course, let's say if this goes down 10%, they will probably go down 12, 14, 15%, because this one is just more crisis resistant. I'm not saying that there are no crises in the S&P 500, because if you look at 2008, for example, or 2020 in March, of course the S&P 500 went down, but it went down less bad than the other ones. Reason number 3 is very much related to the reason I just talked about. It's the Federal Reserve intervention. What do I mean? As you know, the Federal Reserve is the US central bank, and the goal of the central bank is stability and growth. That's very important to understand because, for example, in Europe, the European Central Bank, their goal is not growth. That's not a part of their goals. It's only stability. Why does it matter? Well, you will understand why. In a crisis, what is going on? Imagine 2020 is a great example. What happened in April and May? Well, the Federal Reserve dropped the interest rates, which means actually money became cheaper. And but for the investors, it was not a good thing. I made an entire video here about low interest rates. You can check it out here and in the description below. But to sum it up quickly, if the interest rates are going lower, you have less saving opportunities because you get $0 on your savings. So you have to invest it in riskier assets. Riskier assets such as stocks and real estate, for example. That means that because of interest rates are going down, well, a lot of money will flow into the default stock market, which is the S&P 500. So it's gonna push it. And 2020 is a great example. In a year with a huge pandemic, with a huge crisis, well, you have huge stock prices, all-time highs, well, exactly because of low interest rates. Then, of course, and that's why I mentioned growth here, the US are very dependent on the stock market more than Europe, for example, or China, because the pension funds and how the pensions work in the US are very much related to mutual funds and index funds, so basically to the stock price, of course. In the US, if you have a 401k or Roth IRA or these kind of things, mostly you invest long term in the stock market and it's going to be in the S&P 500. So you are creating more demand. So again, the S&P is going up. And the last point, it's a bit complicated point, so I'm not going to make it too long, but it's very important to understand as well. The Federal Reserve obviously can print money if you want, which is called quantitative easing, QE short. That's a long subject, so I'm going to keep it short. But basically, obviously, in a crisis, they do a lot of quantitative easing, meaning they are printing money. And when you are printing money, you have more money in the system, which means this money has to be invested somehow. Where will it be invested? Well, partly in the default stock market, which is the S&P 500. So again, the stock market, the S&P 500 is performing well, and you can see it greatly in 2020. So my fourth and last reason is the entrepreneurial spirit and funding in the US. Let me explain why this leads to an outperforming S&P 500 compared to the other stock markets in the world. Well, in the US, you have a lot of great ideas. You have a lot of great ideas in Europe, in China, in the emerging world as well. But the big difference is here usually new ideas quickly turn into innovations. So you made something out of the idea, and this great innovation usually solves a big problem and becomes a large business. If you want an example, look at the new economy right now. Amazon, Google, Facebook, Tesla, you name it basically. When you look at the S&P 500 and the biggest 500 companies, obviously, look at the top 10, you will see that most of them are companies from the new economy right now that are performing very, very well. Why does it happen so fast and so well in the US? Well, it depends on what is happening before the company enters the S&P 500 and before it's going public. Before going public, companies can develop full potential due to venture capitalists and private equity companies. That's the big problem in Europe. For example, if you have a great idea in Europe, usually you don't get the funding to become a big company. In the US it's different. You have a lot of people chasing you, like venture capitalists and private equity. They want a part of your business if you're a great entrepreneur, if you have a great idea, a great business. And usually that's why you can scale up so quickly, and that's why at some point, look at Tesla, for example, 15 years later, how they are. They have been, I think Tesla is like set up 2004 or something. So you see how fast it goes and to what it leads. So what I want to say with this is a lot of US champions, Tesla a good example, well, they become world champions and well recognized in the world, or Facebook for example, which means they get very high valuations. Look at the valuations of all these companies. Apple, for example, $2 trillion. And they pay a lot of high dividends as well, which is creating a lot of value for investors. Now you might ask yourself, yes, but in China it's going the right way as well. When I look the last 5 years with Tencent, with Alibaba and that kind of stuff, it's kind of a very good copy that works very well in China. That's true, but when you look at the index and compare it, you will see that China is underperforming compared to the US. Why? And I think Ant Financials is a great example. Ant Financial is a huge financial company that wanted to go public like in October, November 2020, and they have been blocked because they said something offensive or something about the Chinese government. So as you can see, the Chinese market is still immature, and there are things that are happening there that would never happen in the US, which lead well to a slower growth in the market overall. So that's why the S&P 500 is also outperforming China right now. We will have to see, maybe in 10-20 years it's going to change, but when you look at the last 50, 60 or even 20 years, the S&P 500 is clearly above the rest. So now I wanted to know, do you invest in the S&P 500, or maybe do you invest in other kind of stocks in the emerging world, for example, or in China? So let me know in the comment section below. Otherwise, I wanted to let you know that I post once a week every Sunday. So if you like that kind of stuff, corporate finance, market finance, you know where to find me. Make sure to like that video. It takes me about 7 hours to do. Subscribe and have a great week, guys. See you soon, guys. Bye bye.